Hi and welcome. We're here from Chorus One, and this is the very first video that we're producing, but it's the first of what's going to be quite a few. Now, just a little bit of background about Chorus One. So, Chorus One is building validating infrastructure for different proof of stake networks. So, if you have some staking tokens on proof of stake networks, you want to use those to secure the network and to also earn or more tokens on your tokens, then we're here to help you do that. And we've been working on a bunch of different networks. Cosmos is the one we've done most work on, but also we have recently launched a validator on Loom. So we're going to speak about Loom in depth today, but just briefly about our Loom validator. So what are some of the things that we're focusing on and that we're emphasizing with our product? First of all, infrastructure and security. We've spent a lot of time working on, over a year, working on building the most secure validator. So that includes using HSM, using physical data centers and hardware. We've built a lot of our own custom software. We have a highly available infrastructure. So if one leg goes down, when the HSM fails, server fails, we're still up. So that's something we've invested a ton of money and effort into. We're also very engaged in the networks that we work with. So we contribute code to those projects. We help projects mature, give our insights on particular technical decisions and developments. And we'll also take an active role in governance. And then we're also doing a lot of research and insights. So this is part of this, right? Like doing content on these networks that we work with. And we'll, of course, speak a lot today about our Loom investment thesis. And that's also kind of part of that. Overall, if we look at it from your perspective as delegator, what we want to help you do is help you make sure that your tokens are staked and they're staked securely, and that you make kind of like your maximum return from that. But we also want to help you be up to date with those networks, so you really know what's going on, what the most important developments are, and to help you kind of have a voice and contribute to the development of these projects. So knowing what the important decisions are, the important developments. When a governance vote comes up, many of these networks will have governance, to be able to voice your vote in that. So we'll do our best to help you with that as well. But so in the process, and now we're going to be kind of the meat of what we're going to speak about today, in the process of making the decision to go ahead with Loom, we wrote a very in-depth report on Loom, kind of a Loom investment thesis. And the reason for that is that for us, it's kind of like an investment decision too, right? In that we have to, put a lot of resources and effort into this network. So we wanted to make sure that we choose the right project. And then, of course, we wanted to also make this in a document that anyone interested in Loom, whether it's a current holder or somebody who may think of engaging with the project or potentially buying Loom tokens down the line, would find informative and useful. So that's why we put out this report. And yeah, we're going to dive into this report in depth. Now, just some things is, of course, you may want to read this report. We're going to have a link to the report in the notes to this, or you can also find it on our blog. So you can read the report, listen to this, or just listen to this as you wish. And we're also going to have some links to some places where you can come, ask us questions, provide us feedback, engage with us. Would love if you stop by, say hi. So we have a Telegram group, Chorus One Telegram group. So stop by there. We also have a Slack channel. Or you can go to our website, and that's chorus.one, and you can sign up there for our email list. Or you can go to the blog there, and you'll find a lot of posts. That includes a delegation tutorial for Loom. So if you want to know how to do it correctly, to stake your tokens, we have very detailed instructions, including a video on how to do it. We also have a blog post announcing a Loom validator and explaining a little bit our high-level perspective on Loom. And we have a blog post, you can find the investment thesis there. You will also find a lot of content in general on staking and on Cosmos, and there's much, much more to come there. So yeah, hopefully you can check that out and stop by. We'd love to get to know you and connect with you on Telegram or Slack. Before we get into investment thesis, first of all, let me also introduce myself. So my name is Brian Crane. I've been working in the crypto space for a long time, and some of you may know me from the podcast Epicenter, which I started and have been co-hosting for many years. And we're here today with two colleagues. So it's Brandon and Felix. Why don't you guys introduce yourselves?
Hi everyone, I'm Brandon Dillon. I've been with Chorus One since November. I'm working on business development and strategy. My background, I've 25 years in startups and technology. I built my own business. I was CTO of adaptive mobile and network security business. Got into crypto in 2015. And Felix?
Hi everyone, I'm Felix. I'm doing research, analysis, and marketing for Chorus One. I'm joined the company like late April last year. And before that, I was a student and got into crypto, immersed in it in 2016. And since then, I fell down the rabbit hole, and now I'm here.
Cool, fantastic. I thought the first thing we can start about with the thesis. So one of the big areas of focus for Loom is gaming, right? So it is especially people who want to build games that have blockchain-related components, and Loom wants to be the platform for that. And one of the things I really enjoyed in the work in the report is the kind of exploration of what does actually the gaming industry and economy and market look like? How has that evolved? And what are some of the opportunities and challenges that arise from that with regards to Loom? So can you speak a little bit about that, Brendan?
Sure, yeah. I think the first thing we wanted to look at was disruption in the gaming industry, right? Because Loom were coming in, they're like taking a fresh approach. Crypto has certain things about it that maybe will help in terms of crypto, in terms of disruption of the gaming industry. But we wanted to look across time and just see what were the patterns. So we went all the way back to, right the way to arcade games, the console wars. And what we noticed is actually it takes a lot of money to build a gaming platform. Microsoft's are notoriously spent billions building out the Xbox franchise. And over the years, it's been very hard for gaming platforms to break through. And the other thing we noticed is that as the internet, as Web 2 took off, and we started to see the first wave of social gaming, and then we started to see mobile gaming, we realized that even though new game studios like Rovio and things like Supercell and King and Zynga came through, there wasn't really any new gaming platforms that came through. It was very hard for those to break through. Now, there was things like iOS and Android. Obviously, they took over the mobile side of gaming, but that was more by accident, right, rather than design. And also what we saw is the emerging trend at the moment with VR is that Facebook are building the dominant platform for gaming on VR. But again, they spent billions acquiring Oculus Rift. They've also invested billions. So it feels like to build a gaming platform, you need a lot of money. So that was one of our concerns with Loom. So a lot of the things we were trying to figure out is, well, actually, is there something unique about crypto? Is there something that means that you don't need billions to seed a new market? And to start that analysis, we looked at some work that Multicoin Capital, a hedge fund in the States, had put together. And they've put together the kind of 10 main reasons why a crypto app or service should work, right? What are the things about crypto that you would help your app succeed? And they looked at things like the permissionless nature of crypto, the trust minimization, like regulatory arbitrage. But one of the things that jumps out in the context of gaming is this idea of secure asset ownership, to be able to own the assets, to feel that nobody can take those assets away from you. And it feels very, very relevant for gaming, right? Because even though we've had virtual economies in gaming for a long time, gamers don't really feel they own those assets, right? They own them within the game, but they're not really portable. They can't take them outside the game. And there has been ways for people to monetize assets that they have in the game, but it always felt like speculation. It always felt like it was opportunistic. If you could make money out of gaming assets, it was just opportunistic. And what we think crypto could start to introduce is this idea that the income that you earn from gaming becomes a more reliable source of income, and it becomes more of a real investment in time. That when you own your own assets, then you get to a place where actually I feel happy to invest hours every day of my life knowing that if I earn money in these games, that I can take that money outside the game, and it becomes part of. Even though I'm earning money in a virtual economy, I can take it out and spend it in the real world, and we think that will be transformational for gaming.
Yeah, and I guess there are a lot of kind of related things that are very exciting that come up here. The idea that you can have an asset that maybe now is earning one game and you can take it into another game, or even now, let's say a particular game develops and there's assets and communities around that. Like somebody could create another version of the game, and people could potentially move over with those assets in there. And if you think of things like forking, a lot of these crypto native things, and you apply that to a game, well, that's very interesting too. What does it mean to like fork a game? So I guess so far, my understanding is mostly games have not been open source, not developed in an open source way. But then it seems like very interesting to have, games are developed in an open source way and maybe funded by a community, owned by a community, governed by a community, and that you can have like moderated by a community. So that's something I'm really excited about.
Yeah, for sure. I think that's really exciting. And I think the other thing that's really interesting here is this idea that there's a huge market that's just untapped at the moment. Like if you're talking about mobile games or even console games, you essentially need a credit card to buy these in-game assets, right? So it's limited to people who have credit cards, which rules out billions of people across the globe. Or for children, it means that their parents have to give them access to the credit cards, and a lot of the time they're not going to get that access. So the idea that children and people that don't have credit cards or the unbanked can start to enter into these economies and earn in these economies, I think, is hugely powerful as well. I think it's a really big opportunity to tap new markets for gaming. And the great thing is the gaming industry is already growing at a phenomenal pace. It's been double digit growth for years, and it continues to grow at double digit growth. So this feels like it's something that could actually, continue that double digit growth and maybe even accelerate it for a period. So I think it's hugely interesting.
Yeah, I think we've been seeing a lot of this in-game economies and the market moving more to these assets and buying things in-game instead of buying the game itself. So it feels like the natural extension of that comes with crypto, where actually the assets are part of the business model and not going out and buying the game. So you can start playing the game, you can earn these assets, and then you can sell them instead of, and the guys that issue the asset, the game developers, actually make the money from these assets and not from the game itself.
I think that's a great point, Felix, because really what you're saying here is that even disregarding blockchain and crypto and all of that, gaming already was on a path where you said, actually, to monetize the game and to turn the game into a business, we're not just going to charge people for the game. We create these fake assets, right? With some fake sword or something like that, and then we sell it to people, and that's how the game makes money. So it's interesting that you've basically created games invented fake assets, and they're sort of fake assets because, they're just on some database, and this game can delete the database, and the asset is gone, and people don't really have ownership there. And now with crypto, we can say we're actually going to create real assets, right? Real assets that the game can sell. And so, yeah, it feels absolutely like the next logical step for gaming to take. But so there's another thing we could maybe speak about briefly, which is modding. Now, I'm not really a gamer, so I don't understand what modding exactly is too well. But maybe, Felix, you can explain a little bit what that is and how that's relevant in this context.
Yeah, for sure. So, like, if you look at the history of gaming, modding always has been a big part of what made games successful. And when we talk about modding, we talk about like gamers actually modifying or customizing the game in a way that is more fun to them. Like maybe it's a map editor and they change the map and create some new world, or even change the game mode, how you play the game, and what is the winning criteria, let's say. So when we look at this, like the most popular games right now are all based on these kind of mods of other games. And I think that's really interesting if we look at it that way. Like, for example, one of the first examples here is Defense of the Ancients, which was first a map in Warcraft 3 and then became a standalone game. And now it's filling huge arenas as Dota 2 or League of Legends, which is based on this game modes. And also Counter-Strike for Half-Life, or all of these other mods that began as some gamers that thought, oh, I can use this game, or I can use the engine and kind of create something new, that and other players started playing this game, and it became hugely popular, but they've never had the chance to really monetize on their invention. Like, other game studios came in and built kind of the same game, but as a new standalone version, and they got all the credit and all the profits from it. And now with crypto, it kind of opens up this possibility for gamers to actually monetize their new ideas. And if they create something that becomes popular, they will be the ones to profit, and not this huge game studio that just reaps their idea.
Right, because really what we're almost talking about here when you speak of modding is that people would take a game and they would fork the game, right? They sort of say, okay, we take this as a base, we modify it, we have a new version of it, and of course in crypto we're very familiar with the process of forking, right? And it's happened countless and countless times, including some large crypto projects, right? If you look at the top 10 in market cap today, you have something like Litecoin, right, which is a fork of Bitcoin. You have Bitcoin Cash, which is a fork of Bitcoin. Then you have Bitcoin SV, which is a fork of Bitcoin. Then you have like Zcash, a fork of Bitcoin. So in the top 20, you have like 5 forks of Bitcoin, right? So these are people who took Bitcoin and said, we're changing something. And of course, there is the monetary value that comes with it. So I think if thinking of it a little bit like that, like the game is a bit like a chain and the mod is like a fork of the game, it seems like an interesting direction to explore.
Yeah, I think that's hugely powerful. Like, it's the idea that you don't have a universe within a game where you exist in the universe. You have, it's kind of like a multiverse, right? So you could play a game in one world, and then jump to another world, and it might feel like the same game, and you might own the same assets, and you'd have the shared assets, and maybe the same people are there, but the experience can be very different, right? And I think that's really interesting, like from the gamer's perspective, that you could start to jump around these worlds and customize your worlds. And I think the other parallel maybe is around governance. Like, maybe we start to see governance for these virtual worlds, like decentralized governance of blockchains, where communities get together and they decide the rules for their new, for their universe. They can decide their own rules and create their own. So I think you end up kind of creating the base layer to make all of this genuinely possible for the first time, which I think it will be really exciting for gamers.
Yeah, that's one of the. I'm glad you bring up governance, because that is one of the things that I'm most excited about. The way I think of it is that if you look at, at the moment, this area of big interest in the blockchain space is like decentralized finance, right? And a lot of attention on that. Now, decentralized finance is very interesting, right? You basically try to take existing financial instruments and you re-implement them or implement in different ways on the blockchain. Now, I think the issue here is that you start getting into very tricky regulatory environment. You have to be very careful about what to do. And there's, very high risks here. But in essence, you're trying to find, new ways of collaboration. You're trying to have massive amounts of people that kind of together govern these systems and experiment with things. And I feel with gaming is not really a regulated space. And I think there's going to be much less on the radar. So I could see people being much more experimental in gaming and coming up with these new structures, new governance systems, essentially DAOs and collaborative structure. And that a lot of actually the new innovations that maybe will then carry over into general blockchain governance and maybe how DeFi projects are run and kind of blockchain progresses, that they could emerge potentially from gaming. I mean, that's one of the things that I find is very intriguing.
Yeah, absolutely. And I think you start to see that with things like Decentraland, where maybe they're going to take some ideas from the book on what's it called, radical, the radical exchange guys, radical markets guys. Like, so they might take some ideas from those and apply them in Decentraland in terms of how they tax property and how you set the purchase price for property. So yeah, I think you do start to see these virtual worlds being these kind of experimental laboratories where you try out new ideas for governance, and then if and see if they work. And it is, it's definitely a great way to test governance ideas. The other side of governance, I think that's very important, and maybe we didn't cover so much in the report, is usually with a platform, you have, from a developer's point of view, you have governance issues because the platforms that we know today are essentially monopolies, right? They're huge, big corporations. If you're developing on iOS, then Apple basically governs the ecosystem. They decide what's allowed, what the rules are. And I think one of the things that crypto gives us for the first time is this ability to create platforms that are governed by the users, but also by the developers, right? I think developers can start to feel that they can't be held hostage by the platforms, right? They can own and control and govern and make sure that the platform evolves in a way that works for everybody in the ecosystem, and maybe just not for the platform owner. And I think that's going to be very important for game developers. It's going to be so much more secure for you to build your business on these open platforms where you can actively be involved in governance than to build games on a closed platform where you could be shut out tomorrow. Your business could be shut down tomorrow because the platform owner doesn't like your business or wants to compete with you, or whatever reason it could be. So I think that's the other side of governance as well. This is the first time to be able for developers to actually have a say on the future direction of the platforms that they build on.
So let's speak a little bit about VR. What's the connection with VR and gaming, and how does blockchain tie in here?
Yeah, it's funny because I think like 3 years ago, 2-3 years ago, it felt like VR was going to take off, and it just never happened. And actually, maybe that turned out to be really a good thing, because now it feels like the next time VR takes off, crypto is there ready for it to use, right? And crypto can create like incredible incentives for people to adopt VR. Like, the other big trend we're seeing is that, like, if you look at the price of a VR headset over the last 5 years, it's just been incredible how fast it's fallen, right? But at the time Facebook acquired Oculus Rift, you would have to buy like a high-end PC, and then you have your headset and you have your accessories, and you could easily spend $2,000, $3,000 to get all the equipment you need to have a great experience in VR. That price point has come down rapidly. Like a couple of years ago, it was $600-700. Now it's coming down to $200. So very soon it'll come down to mass market pricing, where VR will just be ubiquitous, right? Now VR can work well on its own, because people will buy these cheap headsets and they'll use them for gaming, and they'll use them for kind of experiences like tourist-like experiences where they can explore different like real world sites, or maybe travel to virtual worlds. But when you add in crypto, you start to get to the place where people can actually earn real income, and they can be involved. These virtual worlds can start to feel like the real world, and you can, and maybe that means that people spend a lot more time in these worlds. And again, because the assets are secured, they feel that that's a good investment in time. So I think Mark Andreessen from Andreessen Horowitz completely nailed it there recently. He said VR is now titanically important, right? It will be huge, and he sees it as being much bigger than augmented reality. And I think he's right. I think it's because of all these things. It's the mix of crypto, it's the mix of this mass market pricing point, but it's also the fact that you've got billions of people across the globe that once they can afford these headsets, they have time on their hands, and they also have a need to generate some income outside of their existing lives. So I think all of these things together will make the combination of VR and crypto really, really powerful.
Cool. Well, I think that's providing a very good context and a high level context about gaming and crypto. But so let's speak about the Loom network in particular. So just some background on Loom. So Loom is one of the first projects that is implementing a plasma cache. So of course, many people are aware that Ethereum has had its problem with scaling, right? The throughput is limited, just like in Bitcoin. And the consequence of that is that a lot of people want to make transactions, and then the transactions become very expensive. And of course, if you think about gaming, sort of prototypical gaming use cases, you're going to have a lot of transactions, but they're not necessarily high value transactions, right? There could be lots of little transactions. And so Ethereum is not suited for that today. And then there's been different solutions, approaches to solving this problem. But one of the most practical ones is called Plasma Cache. And Plasma Cache then is basically like an Ethereum sidechain where you can move assets between the Ethereum main chain and this sidechain. And then you can do lots of things on this Plasma sidechain. So that's what Loom is doing. And I think Loom is the first Plasma Cache chain that's kind of in production. Now, this Plasma Cache chain is going to be a proof of stake blockchain, and the consensus there used is Tendermint, so the same as in Cosmos. So they're using some of the same code base, which is also one of the things that we like a lot about Loom. Now you have this sidechain, and this sidechain then can have many other sidechains, and those then would be kind of like DPoS sidechains. So they kind of lower security a little bit, less maintenance sidechains. And so each game could then have its own DPoS sidechain to this Ethereum Plasma chain. So it's a little bit complex. If you want to understand this more in detail, you can also check out the Thesis. But that's kind of the structure. And then what you would often have is you have this DPoS sidechain, and some game is in there. Some game assets are being issued. And those assets will also be issued on Ethereum. So you'll be able to kind of move them to Ethereum, do different things with them. You can trade them on this Plasma chain. So there's going to be a marketplace, right, where you'll be able to trade the different game assets for Loom Token, for Ether, or for Atom tokens as well. Because the Loom Network has announced that they will be connecting with the Cosmos Hub as well, so that you'll be able to take those assets. You could move them to Ethereum, or you could also move them to Cosmos. So those are some of the kind of technical features about Loom. I know anything else that you guys feel should be mentioned in terms of sort of how does Loom work overview?
No, I think you captured it. Yeah, I think it's mostly about scale, and that's gaming will generate, tens of thousands of transactions per second. So certainly Loom is arriving at the right time, to make gaming possible. Sorry, Felix, you were going to say?
I think what's important, what maybe just to repeat, is that on this Plasma chain, all the assets from these other DPoS sidechains live, so you can always move them back to Ethereum, and that's what gives them this inherent security, and you can kind of outsource the less important transactions where the assets are not moved and the ownership doesn't change to these DPoS sidechains, and that's how it scales.
Yeah, absolutely. So let's speak a little bit about the Loom token. So Loom did an ICO in the beginning of 2018. There are overall 1 billion Loom tokens, and there are a bunch of different functionalities of this Loom token. First of all, you can use it to stake on this Plasma chain. So that means there are different validators. Chorus One, we are one of them. So different validators. And each validator has to lock up some tokens on this Loom chain. And then people can also delegate those tokens to the Loom chain. And we're going to speak about kind of the economics of staking just in a little bit. But basically, Loom tokens, one of the functionalities is to secure this sidechain and to incentivize validators for like doing the work of processing transactions and governing the network. So that's one thing. Another function of the Loom token is that, let's say I'm a game developer and I want to connect my game to Loom. I want to have assets being issued there, and I want to kind of benefit from all of these great things. Then I'm going to have to go and I'm going to have to buy some Loom tokens, and I'm going to have to lock up those Loom tokens. And then I lock up the Loom tokens. Basically, my users get like a certain amount of free transactions. So it's kind of like a bandwidth that you're almost paying for. So you're putting up some bond collateral and you get some bandwidth of transactions. So this is quite similar to EOS. EOS does a similar thing. And of course, EOS also has a big gaming focus. So the Loom token, of course, the more game developers want to use Loom, connect to Loom, the more the demand will be for getting these Loom tokens and locking them up in this way. And then there's also going to be a DEX on this Plasma chain, so you'll be able to trade any of these game assets with other tokens, and then Loom is going to be used for the fees there. So yeah, those are some of the basic use cases for Loom. But yeah, maybe Felix, can you speak a little bit about how staking works for Loom? Because that's, if you have Loom holders listening here, the most relevant thing for you today that you can do is you can stake the tokens, and that's an opportunity to earn more tokens. So yeah, let's dive a little bit into how staking works and what the kind of economics and parameters are around staking on Loom.
Yeah, for sure. So yeah, like to repeat again, the staking function is basically mainly there to secure the Plasma chain and to delegate to validators that you think are suited to govern or to secure this chain and to process these transactions that happen. And as Brian mentioned, there's 1 billion Loom tokens in total, and 300 million of those, so 30%, are reserved for staking rewards. That means like block rewards, the same as in Bitcoin, like every block, or not every block, but you get kind of the tokens get inflated from this, or they get paid out from this pool that was set aside and paid out to those that stake. And if you delegate your tokens to a validator, basically you're paying a commission, which means like some of the rewards you get, instead of going to you, go through the validator. So right now the cut that most validators take is around 25%. And that means like when you stake and your rewards, let's say, would be 100 Loom tokens, you'd get 75, and 25 would go to the validator for actually carrying out the work for you. And yeah, so there's a lot of different mechanics how the Loom team is trying to ensure that the chain is kept secure and that people choose the right validators, and also that the ones that stake receive their rewards, and that these 300 million tokens don't run out too fast until like the fees from this market that Brian also mentioned, from the marketplace and these other things like game developers locking up tokens, take over in paying the revenues needed. So the 300 million block rewards are kind of there to bootstrap this network before it has reached scale and before there is a lot of games running on the chain and all of these things. So what you need to consider there is the basic thing is the longer you lock up your tokens, the more rewards you receive. So there's a bonus on this lockup. You need to at least lock up your tokens for 2 weeks. And if you do it for 3 months, if you commit to lock up your tokens for 3 months, that means you can't access them for 3 months. You will get 1.5 as much returns. If you do it for 6 months, you get I think 3 times as much. And if you do it for 1 year, you get 4 times as much rewards. And that is the incentive there is basically to let you lock up your tokens for longer so that you receive more rewards, and in that way the chain is kept secure because there's always a lot of supply staking Loom tokens, and it's not as easy to attack the chain by, for example, buying up a lot of staking tokens and trying to attack the network. The numbers there kind of depend on how many other people are participating and how long they chose their lockups. But the highest it can go in the first year is 20% annual return. If you decide to lock up for 1 year, if you only do 2 weeks consecutively for 1 year, it would only be 5%. So that's the 4 times bonus that I was talking about a second ago. And yeah, so that's the basic dynamics. Over the years, it will get a bit more complicated because these 300 million tokens obviously going to run out, and then also the fees will come in, and then it's not quite clear how the returns will be. But yeah, we will definitely do some analysis and update our delegators on how the fee levels are and how much returns will be earned.
Yeah, no, I think that's very helpful. I think that should give people an overview, and then the investment thesis does go into more depth there. And also just stop by, ask us questions on Telegram if you have any questions around that. There's still a lot of open questions around Loom, so the project's evolving quickly. A lot of things are being modified, being changed. So Loom is having a very kind of ship fast and adapt mindset. We like that. I think it's a good way of going about it. But that also means that a lot of details they're subject to change, and yeah. So just we'll keep people updated as Loom evolves and as these things get solidified. Is there anything else we should cover before we wrap up?
Yeah, I think I'd just say to everybody out there who's listening, like, if you've got any questions, if there's anything we missed, certainly drop us a line, on Telegram or an email or connect in some way. And let us know what else you'd like us to cover. Like, what other areas have we missed? Where would you like us to go deeper? Like, it'd be great to get some feedback.
Absolutely. Yeah. So thanks so much for tuning in. Of course, we would love to have you stay with us as well. And work with us to make Loom a success. So if you're interested in that, check out our website. Also, just a disclaimer here, obviously we do as a company have some economic interest now in Loom by running this validator, and also in the process of doing that, of launching the validator, we went out and purchased some Loom tokens for a security bond. So we just wanted to make that disclaimer known here. Obviously, when it comes to the question whether you want to buy Loom or not, you need to do your own assessment, your own research there. It's not something we recommend or disrecommend, right? So it's something you need to make up your own mind. But we hope that we provide some frameworks for thinking about, where Loom could go, what some of the risks and potentials are. We didn't speak so much about risks here, but actually in the investment thesis, we do have also a list of the things that we think are risk factors and things that, are obstacles to, on the road to the success of Loom. So yeah, with that, thanks so much for tuning in. We'll be back soon. We'll do more of these about Loom and also about Cosmos and about other networks coming up. So we'd love to get your feedback, get your questions, and hopefully we can cover those soon. So we'll see you soon.